What's up, everyone? So I want to talk about the medical stocks or testing stocks. Currently, with what we have going on, these are always trending or pretty interesting. So I want to start off with GILD. If you've been watching GILD, you know for the last few months they've been just up and down. They haven't really taken off compared to the others. They haven't doubled or tripled. But if you look at the beginning of the year, they were 63. So they've had, just like as of now, they've had only like a $10 run up. But compared to what they've done, they've actually had the most progress compared to others. Not towards vaccine. Gildian Sciences is a therapeutics, not a vaccine. These other three have on my left, Moderna, Novio, and NVAX. They're working towards a vaccine, but Gildian is therapeutics. And from what I understand, they want to use therapeutics before vaccines because therapeutics helps out with the symptoms. So instead of trying to force anyone to take a vaccine, which is an immunization, it's easy to just kind of give you a treatment. So they've had their test results and they've been mixed. There's been positive and there's been negative with their reviews, but ultimately they've been able to help. And with their share price, it's been a mixture of both. So you can clearly see that they've had run-ups and then they've had their dips. They ran to 80, came back to below 70, again nearly 80, and then back to 70. Now for last month they've just been coming down. Before this, 3 months ago, they've been on a climb. You can see that they have the resistance right up here near 80 and then support near 70. But for this last month they've just been coming down, which is kind of odd because when you look at NVAX, they barely got a good amount of funding, and I don't believe they started phase 1 testing compared to these Inovio and Moderna. But looking at NVAX, you can see that once they announced they got their funding, and I believe that they were planning to start phase 1, they doubled, and from there they almost doubled again. They pretty much, they nearly tripled just off their funding and their announcement about phase 1 testing, which is good. If you're holding from a few months ago, then you're happy with what you invested. But if you're looking at NVAX right now and debating we should invest, I wouldn't do it right now. They've been on a decline simply because I believe people who invested early are locking in profits, which is good for them. But if you're looking to invest in NVAX, if you see it, then go ahead and start a small position. If you really believe it, then go ahead and just go all in with what you feel comfortable. Don't go all in at once and then kind of regret it later when you see the share value come down, or you'll be happy if it keeps on continuing to double or triple. But for now, they've been on a decline simply because you can tell that ever since they reached 20 or just about 20, they've had pretty good performance on their share value. Their vaccine progress is still in progress, but their share value has reflected more than what they've actually done, and in my opinion. But if you feel like you're ready to invest in them, go ahead and start a small position, just see how it turns out, and then if you feel even more comfortable, then go ahead and just fulfill your position. But for right now, you can tell that with my setup, with the 3-day, 8-day, and 6-day moving average, they're way overvalued right now. I understand that they're working towards a vaccine, but for their stage, they're way overvalued right now. So the way I have my moving average is simply, it's short compared to others, I believe, but it's because the market's volatile and stocks are really volatile right now. So this is how I like to view them. When they're above the 16-day moving average, that's I either, if I'm holding something, then I pretty much sell. That's what I did with Moderna. I'll get into them right now, but with NVAX right now, I wouldn't touch them unless you're getting a put. But even if you get a put, just be careful because they've been jumping so much. So it's hard to tell which direction they're going to go from here since they already came back from a dip, or they already came back from a high. Oh yeah, they did reach 60. So yeah, they tripled easily in those last couple weeks. And so that's NVAX. Gildian, if looking at them, they seem really troubled in their share value and with their news, but overall they've made the most progress. So I'll most likely just jump back into Gildian instead of these other tech stocks. Actually, Inovio. I actually like Inovio, but for right now, Gildian's the top one, in my opinion. Like, it's the safest one. It's the one I like for right now. And if you look at the moving average that I have set up, they're pretty low. They're at a good buying point. Before it was, I've only made several plays, not that much, but I haven't bought the dips and haven't sold on the highs, but I've been close. And if you could look here, you can see that with my moving averages, you'd see where like I'd most likely buy and sell, and I haven't done it each day. There's been times where like I would do it where it's an obvious buy. I believe it's somewhere around here that I bought like in the low 70s and then sold a little bit past 80. Now I'm gonna go ahead and skip Gildian and talk about Moderna. If you're holding Moderna, then you're most likely a long holder because they've been growing a lot. But if you just recently jumped into Moderna in this last couple weeks, then you might not like them so much. Simply put, they announced on like a week ago, I believe on last Tuesday, that they had a public offering or sold some shares like over $1 billion's worth. And then the next day, it turns out that there was some news on their early stage vaccine results, and that's just brought them down a lot, I believe. Yeah, they came down nearly a third of their share value. So if you're buying in pre-market or anywhere near that time, you bought in over 90, and ever since the public offering, it's had a small sell-off because nobody really likes that. And then after their vaccine results or their early stage results, it's just brought them down some more, and now they're just in an odd position where it's kind of a coincidence or just looks sketchy what they have going on in this last couple of weeks. And something happened with Inovio similar to what happened with Moderna a few months ago when I first started investing in them. My cost average was around $6, right around here, before the run up. It's not that I timed it perfectly, it's just that I was buying around these prices, just a small portion, and then as it kept going up, I had FOMO, and I decided to buy in some more, and I was buying in until like the mid 7s, which kept my cost average around the 6s. And at the time I thought that these medical stocks were going to start blowing up, but of course now everything keeps going up. At some point it comes down. But Inovio didn't just come down because of a sell-off or people locking in profits. They had a report from Citron come out, or it's not even their report. Citron released a report that they believed that Inovio was falsely announcing that they had a vaccine within 3 hours, that it was impossible. And because of the market at the stage what it was and what the current situation that was, going around, people, I'm assuming, locked in profits or didn't believe it either, and played it safe, which is good on their part. But I happened to hold, and with this cost average, if I would have sold up here, it would have been tripled, But I held, and even down here, I didn't buy some more. I didn't buy the dip. I didn't sell up until even after this spike right here. I don't know why I actually held so long. I didn't end up selling until like mid 7s, near my cost average total, and then just throughout the next few weeks I ended up selling some more. But then of course it had another dip and then another climb. Now I've been in Inovio for the last couple weeks up until I was in Inovio for the last 2 to 3 weeks, but then Citron came again and released another report. So I sold right about mid 14s, and not for the reason of the report, but because of what happened before. I believe that people are going to start to sell off again because they will believe anything they read. I simply sold because I believe people are going to act how they did before, and also because it's above the moving average. I'll use the blue 3-day moving average as a sign of where the share value is. I know the share value is right here on the top left, but I like to follow the 3-day moving average as a sell point, and then the 16-day moving average, the purple line, as a buy point. So pretty much right now, I believe I bought in like at $12 and sold in the mid 14s. So it's small profit, but for now, after the Citron report, I see it. I believe it's just going to struggle a little bit. I'm not sure if it's going to be able to hold its share value like it's been holding for the last month. And yeah, so that's what I have for the medical and testing stocks. I only have ABT and CODX, and I know there's definitely a lot more testing stocks or companies. Like I had some Roche and I let those go. Simply, it moved too slow for my taste, and of course, seeing all these other move a lot more, I had FOMO, so I let go of Roche and jumped into ABT. And ABT, I had a contract. I haven't gotten shares. I had a contract right when it was about the 89, 90 stage, which I believe was right around, a few weeks ago, a couple weeks ago. That was like a few weeks ago. Right around here, I had a contract that they were going to be, I believe, 95, and I should have locked in profits, but I got greedy and didn't sell the contract until it dipped like the mid 90, about 95 again. When it was hitting 100, it had resistance, but at the same time, they had a lot of news coming out that the UK was gonna start using their kits, so that they had a mass order. But yeah, no, I held the contract, and on the way down, lost some profit. So didn't lose any investment, but lost profit. So with Sabit, they're pretty much floating around the low 90s, and they have a lot going on for them. So if they happen to rise near 100, it'll be interesting if they can break through that. But for now, I believe that they'll probably stay in the low 90s, especially after it was reported that some of their tests, or not some of the tests, there was a percentage of their tests not catching the positive results. I believe 45% weren't catching positive results, but then they went ahead and said that it was of improper use due to the people handling those test kits. And so it puts them in that kind of odd spot where they have to prove themselves now. But for now, they're still pretty good company. They're big, so they're something I can invest into. CODX definitely had a run up this last month. I think mid 15, low 15s. It just continued to climb, which is good. I believe this climb was due to Abbott's report of missing positive results. When one does bad, if it's another company that offers the same service and they're not looking bad, then people jump out of one and go into the other, which I've done before. And sometimes it goes good, but then you'll have that time where if you follow the run up, you'll just most likely get caught on the dip as well. So just be careful with that. But CODX is a good one. I bought in early January. Sorry, no, like early February. But I let go once it reached these levels again, because we were watching this in the low 5s, low 6s. Then when it started to climb, FOMO kicked in right around here, and my buying average was like 14 something. And then when it hit 16, I was like, oh, I gotta buy some more because it's just gonna keep going. But of course, you know, with every run up, it'll have a dip. With every spike, there will be a dip. So when it came back to these prices for like about a month, it sucked. So to see it come back up here, I exited my position and then haven't touched it since. But it's looking pretty interesting right now, especially after these spikes and these dips. So it'll climb to a certain share value, and then it'll just dip, and then it'll hold, and it'll climb again. So if you look here, it's pretty stable right now. I think like a $3 fluctuation, like low 18s and then high 20s. But for how long this situation will go on, ABT and CODX still seem like a pretty good investment. Yeah, these are the two testing companies that I like to follow. So yeah, this is what I have for right now on the medical stocks and testing stocks. So I'll see what I can bring into the next video. If you have anything you want me to kind of read or talk about, go ahead and leave it in the comments, and then I'll bring it up in the next video. So thanks for watching.